I've known this to be true, although one of my VCs always reminded me of this, is that companies are bought, they're not sold. So, when you're thinking you can sell your company, then there's a kind of a diminished return in a way, because that means that you're ready to get out of it. I was born in Bolivia, South America. I came here to study engineering at UC San Diego. Pretty close after graduation, I went to work for a startup company here in San Diego that allowed me to do all sorts of interesting things. As a young engineer, they gave me a lot of, you know, opportunity and green field to go get lost in. And they were a LinkedObjects spin-off, so LinkedObjects being, predecessor to Qualcomm here in San Diego. And they were in the satellite communications arena. I was a computer engineering and electrical engineering major at UC San Diego, so my background is in engineering. And then subsequent to spending a few years as a professional engineer, I went back and got an MBA from UC Irvine. And so in, my early career was the first job I had was at Solar Turbines. Then I went to work for a company in Kearney Mesa that was doing instrumentation, and then I went to work for this startup. And in that I went, from a very, very large company where I was basically the only female engineer in the electrical engineering department and controls department, to a startup that had, a handful of engineers. And there was at one point another female engineer there as well. But they allowed me to pretty much flourish and do all sorts of interesting things. And in that case there, I came in there to kind of create a new product line, and I was super young. And, having somebody say, oh, okay, you go create a new product line, and then, you have to do your customer discovery. You have to understand, sales, how to support your customers, and really how to build a team. That gave me the first flavor of what it would look like if I were to go do that myself. And soon after, basically I concluded that project, and I realized that maybe I really do want to do this by myself, and kind of figure out what goes on, because in previous jobs I had seen consultants come in and seemingly work less than I was working, probably making a lot more money, and I thought, you know what, maybe I should go do that. So I walked in and I told my boss, I'm leaving. And he said, what are you going to go do? And I said, I'm going to go consult. And he says, and do you have a customer yet? I said, not yet. I'm going to go find one. And he says, okay, well, why don't you come back here and consult for us? And that was that was my first entree into, oh, okay, I leave on a Friday making, X salary, and I come back on a Monday making 2X the salary. And so I built a little consulting firm, and out of that, I first had a first exit. So that was, my entrepreneurial, spirit was from the get-go. My father owned his own business, and I kind of felt like I had done one product for this startup, and kind of gone from design on a paper napkin all the way to, production and customer support. And I thought, well, I could probably go do that myself now. And so that was kind of how it started. Yeah, so that consulting business did hardware and software services for a variety of companies, including companies here in San Diego and up in the Bay Area. And the first opportunity for exit came as a consequence of a contract that, we had a contract with some medical information systems, and the development of some of that. And we were working with Kaiser Permanente here in San Diego, a very, very large intake clinic for Kaiser called Positive Choice. We developed some software on our own, and then we spun off a company called MedSmart. And that company continued developing and creating this kind of suite of software for delivering, or actually capturing patient data, and then displaying it for the physician. So it was a front end of a EMR. An EMR is a medical record nowadays that everybody's using in hospitals and clinics. But in those days, there weren't that many EMRs, and we were kind of a front end to something called Epic, which is the largest EMR there is now. And Kaiser was developing a relationship with Epic, and we were capturing a bunch of information from the patient that could be the front end to this Epic. And so we also, as a consequence of our relationship with Kaiser, we participated in a very, very large study that the CDC and Kaiser were doing, and they used our software to do this very, very large patient study. And Kaiser really wanted to own this software, and so that was the first exit. My first company was called Summit Design. We were doing the engineering services. I spun out this medical information systems company that was doing a front end to an EMR that was capturing patient data and participating in very, very large CDC study. And that led to Kaiser really wanting to own that software. So we did a deal with Kaiser, and that was the first exit. And whenever I talk about that, I always say, like, it was like, okay, that's interesting. Somebody's offering me some money. I'm super young. Let's go. I can, I'm like, let's buy a new house, or whatever. I mean, so that led to, actually me, buy a house, and I tell people, if you're like hoping for like the $1 billion exit, your first exit is likely not going to be $1 billion. So you might as well figure out if you want to take it or not. And so I took it. I had some mentors, and they were like, you know what, you're going to go back and do this other stuff anyway. So I did, and it worked out. It worked out for a while. We continued to work with Kaiser as they kind of integrated it in, and then we all went off and did our own thing. And then I went back to my consulting services business, and then I participated in the development of what is called the endoscopic capsule, which is a very small pill that has a little camera in it, and you swallow it. It takes pictures of your intestines. And we developed some of that technology here in San Diego for a company in Israel. That company went public, but my co-founder, my former boss, who I left that company and I said goodbye, and he said, well, come back and be a consultant for us. He came and partnered with me, and we worked together for a while in this consulting business, and we developed this PillCam, which became a very, very famous kind of product. And we did a lot of kind of the guts of that PillCam here in San Diego. And as a consequence of our work there, we started a new company. And we always thought that this PillCam, even though it's a medical imaging product, we always thought there was an opportunity for the combination of imaging and wireless communication in other areas where you could use cameras and wireless to put cameras pretty much anywhere. And so we created a company called Avaak, which ultimately created a product called Arlo, which is a very famous now product that is, sold worldwide, and the number one basically consumer camera company for monitoring and surveillance was created by us. That company was bought by NetGear. We were venture funded, but the story with that company was we bootstrapped it. I think you know a little bit of that story, but we bootstrapped it with Department of Defense government grants, SBIRs, and what's called BAA, broad agency announcements. And we originally put together the technology with these SBIRs. And then we went and raised the venture capital from a few Silicon Valley VCs and ultimately from Qualcomm Ventures here in town. And then we came up with a very cool consumer camera company, camera product for monitoring your home or business from pretty much from anywhere through using your cellular phone. And we rode the curve of people's adopting smartphone technology to kind of basically see or look and experience things from anywhere. And then after a few years of running that, we sold the company to NetGear, and then NetGear spun out Arlo as a separate company and took it and IPO'd it. And so we exited, we sold it to NetGear, and we moved on.
Talk about that process. I mean, your first time selling, a lot goes into that, a lot of negotiation. Just any wisdom you can share from that first sale. Let's hang on that for a second, then we can go to the second one, and just feelings you had around that.
Yeah, the first one was like we thought that we could raise venture capital for that first one as well, and it was interesting because there was always a question about whether whether I was the right person for the job, and whether when we went off and tried to raise some money, and whether anybody else would want this, or whether it was really for intended to be built for Kaiser, although it was being used at UCSD as well, or UC San Diego Medical Center, some of that software as it was at Sharp. So there were three main kind of customer base that was using similar software. And we thought, well, okay, let's play this out and maybe go raise some capital and try to figure out whether this is something that, could be much larger. And then Kaiser, as we were doing that, we were introduced to Kaiser Ventures, for example, and so forth. And then Kaiser themselves thought, you know what, I think we really want this software. And for me, it was a way for me to kind of leverage something, right? Because it's like bird in a hand versus like I'm going to make $1 billion and end up with nothing. And so there was this whole thing about whether I should go raise money, but I was getting kind of pushback from the VCs. And even though I had a very senior level advisor that could have been, like the COO or president or something like that, anytime we were going for meetings with venture capital, it was, this whole thing about he was the older guy and I was the young girl, right, sitting here. And by the way, I've experienced that in the other sense as well. But it became, it kind of like gave me, if I took the Kaiser deal, it gave me the opportunity to kind of feel free and then go do something that I wanted to do and try it again. And then, with kind of an exit in a way in your pocket, then, maybe the next time it wouldn't be as complicated to raise capital. That's never true, but, it turns out that. So So when I was at the time that I exited that, I was I was in my mid-30s. The feeling was, well, am I going to go and really push on this, trying to raise venture capital and trying to figure out whether there's a huge market for this, or whether I should just, take something that's assured success. And that's kind of how I weighed it in that case. I do tell people, when somebody writes you a check for $1 million, so you can do a lot of things with that. It's like, it's like you can buy a house, or you can take time off, you can go on trips or whatever, which is all kind of very true. In the first one, as we were trying to raise, capital in other ways, there was also an opportunity to sell it to some other folks. So we didn't run a process. I mean, it wasn't like we got a banker involved and we ran a process. That wasn't the case at all. It was basically, just a series of meetings that were happening, and then, people would hear about something, and then they would kind of be interested, because if somebody like Kaiser is interested, then there must be something that somebody else, could be utilizing as well. And so in that lessons learned, it is about kind of trying to figure out how to, enhance your positioning in a way, right? And see if you have an opportunity to get a competitive bid, right? And so we were trying to drum up something here, and then kind of this thing occurred, right? But if we wouldn't have been drumming this out, maybe this wouldn't have occurred. So there's that. I always say, I've known this to be true, although one of my VCs always reminded me of this, is that companies are bought, they're not sold. So, when you're thinking you can sell your company, then there's a kind of a diminished return in a way, because that means that you're ready to get out of it or something like that. Versus if somebody really, really wants what you have, then that's then somebody's buying something that they really, really want, or put a high price on, or whatever.
So let's jump over to the NetGear exit. Big company, big name, big brand, also just like Kaiser, pretty incredible.
In that case, we had investors that were driving the bus a lot, right? I mean, we were driving. My co-founder and myself were, we had bootstrapped the company really with nothing. I mean, with our own funding and with SBIRs. When VCs come into the picture, there is, all sorts of things that occur. And in this case, it was a consumer product. It was a consumer product that, had been launched at Amazon and Costco, and was going into, Best Buy, and expanding into all of Costco and, Walmart, and, all these consumer electronics companies or outlets. And it was a question of whether, for us, it was a question of whether we should go and raise enormous quantities of money, or whether we entertain an offer that was productive enough for everybody, that basically allowed us not to do that. Because in a consumer, in the consumer world, it really is an expensive and a heavy lift on the marketing side. And so, that was really the main kind of strategic question, right? For the board and for the founders, was whether, it was appropriate, it was at the right time, and whether, what was kind of the best way of looking at this, and what would be the best outcome possible. And so, through a variety of, reasonings, it was determined that it was better for us to take something that could allow, this brand to flourish, basically, that didn't require an enormous amount of capital from the people around the table. The other thing is that, when you have VCs, when you take a term sheet, you don't typically think about, well, do these folks have the wherewithal to stick, with a company that is in the consumer electronics field, and it'll require enormous amounts of capital to go worldwide and to expand and to do all these things. You take a term sheet kind of in a way, a bit of a nearsighted way, because you go, oh, okay, I'm evaluating 2 or 3 term sheets, let's say, and you're not necessarily evaluating it based upon whether these folks are going to have, their own intrinsic issues or whatever it is that, happens later on that you don't ever perceive. So for us, it was that was basically the strategic discussion that was being had, and we had a lot of interest from these consumer electronics companies that wanted to partner with us, wanted to invest or do a buyout. And so it came to a point where we were kind of in that place where the ramp was going to take a lot of money, and it was time for us to just make a decision as to whether we should go raise lots and lots of capital or whether we should move on. And it became clear that the folks around the table really wanted to take the deal, and then the deal was done. So whether there's regrets or not, it's one of those things that gave me it was from a timing perspective. My mom was in a position that I really needed to go help her. There were lots of things that worked out. And people say, do you wish you wouldn't have done it? Well, there was a lot of good stuff that came out of it, right? And so, it's a global brand. It became an enormously successful product. And I was at Costco today, for example, and we're like, oh my gosh, here it is. You see it all over the place, right? And it's like, yeah, that's what we did. And so I can't disclose the price because NetGear never disclosed it. But everybody was satisfied, I think, with how it transpired and it occurred. And in that case, the process was much prolonged, because in the first case with Kaiser, we were working with Kaiser very closely. We had already, they had already used our software to run their clinic, and they were also using it with the CDC stuff. And in the case of NetGear, they actually ran a process. They actually ran an acquisition process. They got really, embedded in the IP and understanding all our systems, understanding how they could scale it, because we were manufacturing in China. Could our manufacturing plants scale to, basically the worldwide, ramp that they were expecting? All those things that, were completely different from the process perspective than the first one. The first one was like, me negotiating with folks over dinner, right? And in this case, it was like, here come, all the technical resources and business resources of NetGear kind of descending on you to try to understand what the heck you have here. And it was like the process was much harder, much longer, and much more prolonged and harder in terms of, just the amount of information and the amount of kind of time that it took. I always wanted to be involved with the university, so I really kind of focused on becoming more involved at UC San Diego, joined the advisory board for the Jacobs School. Then I started getting involved with board, just startup boards, and I got appointed to a public board. Then, just all that stuff kind of took a life of its own. And my consulting work ended up being more of a management consulting instead of, technology consulting, which is what I did before. And so I've worked with very large companies on their innovation strategy, and I've worked with smaller companies on, just getting them off the ground and helping them out. So that's kind of what I've been doing over the last few years. Yeah.
If you don't mind just speaking to that process a bit, what company is it that you serve on the board for, your role, and just how did that come about? Because that's something I know a lot of folks are looking, how can I parlay this information and experience into something bigger?
I mean, for me, it's been very much, like anything else, it's somebody that you know or somebody that knows you. And, happened to be somebody that has mentored me for many years, was a real advocate. And so he thought that I would be a good board member for this one company. And he knew that I had exited and that, I was ready to do something else. So like soon after the exit, I was appointed to a board. And then, in that case, the company needed a little bit of strategic direction. So besides my board role, I had a bit of a more like an executive board role where I was helping the CEO and CTO with some kind of strategic input. And that company, that board role led to other board roles. And one of the board roles that it led to was that company got basically merged or acquired by a public company. And a couple of directors from the private company got appointed to the public company. And so it was a relatively large board of directors. I think there were 7, and there were 2 of us that got appointed to this board, to this public board. And I was one of them, and then this other gentleman was appointed to the public board as well. And so that gave me the opportunity to, parlay my experience from the private board and kind of move it to the public board. They were in New York. I was here. There was the other director actually was also in San Diego, and we were flying to New York quite a few times a year. At first, you think, oh, it's quarterly board meetings. Well, in this case, it wasn't. It was like at one point we were having monthly board meetings, and we were flying to New York. And so after a while, it became a little too heavy. And so, we both offloaded that board pretty much at the same time after a couple of years of flying to New York on a monthly basis. It's a little too much. And subsequent to that, I've been on other private boards, and then this year I got appointed to another public board here in San Diego, a company called One Stop Systems, OSS. And in their case, they were looking to kind of bring new blood into the board and get different perspectives. There was already a female director when I was there. In the first board, there were no female directors. I was the only female director, and that's been just generally the case, by the way. Yeah, and in this case, they were very much cognizant that they wanted to have diversity on the board. They are a NASDAQ publicly traded company, and NASDAQ is really looking at legislating that. And in California now, there is a legislation regarding that, that you must have diversity on boards. And so I think in general, that really helps, female executives transition onto board roles. In my case, I'm a technologist at heart. I've done, technology products my entire life. And so, I bring, some form of, of specific knowledge. On the first board that I was approached for and that I ended up joining, that was a private company, it was definitely up my alley. And when I tell people oftentimes like, well, how do I get on a board? Well, the first thing is that if you're a woman, it typically will require you to have deep understanding of whatever it is that they need. You know, it's not that you just kind of get appointed. It's like, unlike, you know, we don't play golf or whatever, you know, and so we're not meeting folks that need board members at the golf course. It typically is like you have in-depth knowledge of the market they're in or the technology they're using or whatever it is. And that's, I think, in general, how women get appointed.
Have you dipped your toe into angel investing as a full circle conversation here?
Yeah, so I have invested, and I have actually one investment that I have is a woman-led company in LA in the real estate field. Yeah, so, you know, I don't do much angel investing because it's, you know, I have other things that I'm doing, but I have done some investing and have a piece of my portfolio kind of dedicated to that piece.
Well, Gioia, any last minute advice that I missed that you'd want to share with folks who maybe are thinking about at some point, you know, looking towards an exit in their business?
It's the question of what do you really want to do, and what you know. It really becomes a personal discussion at that point, and kind of understanding something about yourself. And I always tell people, if you're young, there's never a wrong answer, right? I mean, because if you decide I'm out of here, I will take this, you know, amount of money that these folks are trying to give me, and I'm going to run. You have the opportunity to do it again and again and again. Or you have the opportunity to not do it and travel the world or whatever it is, you know, that you want to do. And so it gives you that freedom and you know, the opportunity to kind of just do something else for a while if you so wish. So it's about really kind of your 100% your own personal desires. And you know, when you have VCs, that's a different question. That becomes a much more, a larger strategic discussion.
Well, Gioia, thank you so much for your time. I really, really appreciate it. It's been awesome to catch up with you.